Hello, this is Jeffrey Cohen, U.S. Advanced Computing Infrastructures, Inc. I am the founder, president, and CEO, Jeffrey Cohen. Here to talk today about lots of different things, right? So what are the facts that we see in the market? What are the insights that we can gather, or ideas? And then what's the thesis? Where do we see the market going? And I'm going to try to show you how to get at some of this data, and it's just going to be really interesting. We got a lot of interesting things to share. And I'm going to share with you some of the model outputs from last night's run and what it says about the market. And I'm not even sure I like what it says about the market, but you've got a run, you might as well use it. And also we're waiting on the Apple event. So we believe not just that they have a beautiful screen icon, but that Apple's about to blow it. Apple's about to announce product that no one's going to buy. Do you know half their revenue comes from cell phone and cell phone related revenues? And if they blow it, if they announce a cell phone that's just marginally better and they expect people to pay $1,000, $1,500 more, it's just not going to happen. And Apple will lose $1 trillion in market cap. It's so interesting to think about it. So we're waiting to see the event. I mean, if they say that they reduce the width of their phone by 1 millimeter. Oh, and they use USB-C ports. I love it. At least I got cables for it. Here we go. That doesn't feel like Apple uniqueness and proprietary nature. That looks like Dollar Tree, $1.25. Doesn't feel like Apple to me. So I think they're totally messing up, and we're just going to watch the demise. But let's get into it. What did we see? What do we see out there? Well, the VIX, and by the way, I've got better data now. The VIX, if we look at the CME, the futures and the options, you can see we're at 1417 on the VIX. At 1397, it's come down. So VIX is 14, it's 15. It's so interesting. So VIX is lower. Here's the puts. Here's the calls. So, all right. It's interesting. I do not know how to read all this. So I'll stick with the high end. 1418. But, God, we got to learn more about that. So, but if you go to the Chicago Board of Options Exchange, you can see the VIX, the volatility. You're at 1399, which is up 0.19. You're almost at 14 handles. And I just think this is so interesting. So the VIX is getting higher. Higher VIX, lower stocks. We look at the S&P 500, and I'm going to show you another map in a minute. But you can see, and it's not all the way true, but large stocks going down. So I want to show you something that I produced with my data run yesterday. If you were to look at the U.S. stock market, U.S. listed common stocks, 3,023 stocks passed data validation. They have a market cap of $51.8 trillion. We've seen this market cap number vary as much as 4.5% in a day. Now, the S&P 500 index, the NASDAQ, the Russell 2000, they're changing by like 1/3 of a percentage point. But yet the overall value of the stocks in the market is having a big move. So we decided to take a look. Oh, look, the largest cap stocks are red. And so what that says to us is there are moves underway to get out of large caps. So we're going to take a quick look at this bubble chart. So this is FinViz, finviz.com. I like them. So we're going to look at market cap 200 billion and above. We're going to look at the color. Isn't going to be the sector. It's going to be 1 month performance. So you can see how the largest stocks are generally speaking green, with the exception of Apple that we talked about. But you can see the smaller ones, JP Morgan, Bank of America, Procter & Gamble, Coca-Cola, McDonald's, they're red. United Healthcare, Johnson & Johnson. Now, Eli Lilly just doing great. But in general, the largest cap stocks are up for the month. The question is, how are they for the day? And you can see the smaller cap, large caps are up. The larger cap, large caps are down, right? They're the most liquid. And so it's just interesting to see it, right? So it says, yeah, people are getting out of the large cap stocks. That's going to affect total market valuation, market cap, and the destruction of money invested. So now let's take a look at crude oil. Crude oil finally kissed $89 a barrel. West Texas Intermediate. You see the code there. At the end, there's a 3. CLV3. Well, it doesn't matter. We're just going to look at it here. Oh, 89.04. It's even higher. And you can see backwardation, right? The longer you go out, the cheaper oil is. It's interesting. They're expecting lots of drilling and lots of new capacity. See, normally you'd store the oil, you'd sell it forward, and you'd pay an interest charge. So it would cost more. But now it costs less because people don't believe that oil is going to stay expensive. But you could see, oh my God, 89.08, 89.06. This is October delivery for oil. That's really high. So oil's high, gasoline will go up, diesel will go up, transportation and logistics will go up, the price of gasoline goes up, consumer price index goes up. Not that helpful. And I posted, it was interesting, why is it that our federal government refuses to make it easier for U.S. companies to drill? I just read something about them canceling oil leases. I don't even know if it's legal to do that, but they did. They just felt like it. And then there's states, Colorado, New Mexico, just making it more difficult to drill. And then you've got the Sierra Club and everything working with the federal Justice Department and the what am I thinking of? The courts to stop pipelines. So once we drill the oil, then or gas, then we stop the pipelines. So now you might as well vent the gas or just leave it in the ground and have ducts as opposed to turned in line wells because there's no pipelines. Why don't we fix that? Why are we making Russia rich and the Kingdom of Saudi Arabia rich? Why don't we make America rich? I don't know. I love America. I think we should be rich. Not a bunch of, countries that seem to be acting like, in their own self-interest. So let's take a look now at treasuries. So I had read somewhere that interest rates are pretty important when it comes to figuring out how much a stock is worth. The higher the interest rate, the lower the valuation. And so we look at the 10-year, and you can see a lot of Globex volume, and the bond future, actually it's a note future, is a little higher. 10-year ultra, little higher, not much. The 30 years are higher, more high. And the shorts are, shorter term, 2-year, 3-year, 5-year are a little bit lower. So what that means is when bonds go up, the interest rates go down. But really for the 10-year, it's about flat. And when bonds go down, interest rates go up. So short-term interest rates are going up, long-term interest rates are going down, but not by very much. And so treasuries are pretty flat. CME, thank you for access to that information. That's great. Again, you just search on CME. Here's another web page for the CME talking about treasuries, talking about how you can invest using futures. And you can see here Again, the 10-year, the 30 years, the bonds are up slightly. But when you look at a 10-year note at 109 and a quarter, and you look at a 30-year, and you look at it at really 119, that's pretty cheap. That's pretty cheap. Bonds are pretty cheap right now. They've fallen a lot. And so, rates are higher. Let's take a look at just a simple view using Yahoo Finance. Again, thank you, Yahoo Finance, for the data. And you take a look at stocks. Let's, refresh everything. Stocks aren't really down. The indices at least look kind of flat. The Russell, which is the small caps, are up. Nasdaq's down, 0.2%. S&P 500 is down 0.33%. And what does that really tell you? It tells you, stocks really aren't moving in any direction. You see interest rates aren't really moving in any direction. So market's kind of waiting. I noticed Bitcoin was up, which is interesting. Bitcoin up $1,000, $1,111. It's up 4.5%. Bitcoin's up. Now, Bitcoin over the past month has been really, really, really flat. It dropped and now it rose. So it makes you wonder what happened there for that day or two. Well, we know what happened. The Federal Reserve and the U.S. Treasury is looking at whether to allow ETFs based on Bitcoin, actual hard dollar ETFs. So I look for one for my model. It would be great to have an ETF that tracked the price of Bitcoin. That way I can look at correlations. I can look for a more efficient and optimized portfolio that might have a little Bitcoin in it, right? That's nice. It's nice to have. It's like I look at gold and I look at silver and I look at oil and I look at copper. I look at all those other things. I look at the VIX. I look at interest rates, long and short. Why not put in a little something for Bitcoin? But it wasn't allowed, and so the market dropped $1,000, but coming right back. So maybe it wasn't that big of a deal after all. What else do I have here? Yeah, I got some other ideas, but before I go into it, let's see what other data that I can share. Here's another data point that I thought was interesting. This is a view of companies that hire the most employees. So you see Walmart has over 2 million employees. That's amazing. One company, 2 million employees. It's hard to have like 25 employees, right? Much less 2 million. Amazon, 1.5 million employees. What's interesting is those two companies have been at the forefront of raising the pay of entry-level workers. And so I guess the reason they do it is if you've got to attract and maintain a 2.1 million employee base, you better pay them well to at least get the best people. But the color, the bubble color is the 1 week performance of the stock, right? And the bubble size is the relative volume of that stock versus all the others. And so really, like Walmart, Amazon, they aren't trading very much. Oracle, which doesn't have that many employees, Northern Trust, RTX, UPS, Accenture and UPS have a lot of employees. Now UPS raised their cost structure. Accenture, just as what is a consulting firm, right? So lots of employees, highly paid employees. But a lot of the companies moving don't have a lot of employees. It's not that employee costs are wage inflation was a big deal. You would see companies with a lot of employees really moving around a lot. It looks like those companies with, let's say, 400,000 employees or more, you're really not trading much. You're really not, right? And so and they're really not moving. UPS is moving, but these colors aren't very vibrant, right? So they're not really moving. The story stocks are the ones with fewer employees. So let's take a look at the x-axis, and instead of looking at employees, let's look at sector. So if you look across the sectors, you see there's a lot of red, right? So performance for the week, you see some have really dropped and some have really gone up. So Zion was considered a very, very risky bank. PNC Bank, not quite as risky. Those have gone through the roof. Those have done great. Walgreen Boots Alliance is actually is down. You see it's red, right? But its relative volume is high. Just so interesting. WestRock. Okay, now that's moving on a story. So we're going to look at x-axis. We're going to look at the y-axis isn't the change. Let's look at y-axis being volume. And so where's the volume in this market? The volume in this market is Oracle and Tesla and WestRock and Amazon and Ford, right? Because of the strike potential, and Walt Disney. So a lot of, I don't know what Kenview is, ExxonMobil, Bank of America, CVS, RTX, that's a story issue with the airplane engines. American Airlines having a lot of volume is interesting. American Airlines stock has been dropping through the roof. We ought to look at that. This is a way to find stocks to actually look at. Who knew, right? Why is American Airlines moving? We take a look at some of these others, and it looks like Walt Disney has kind of gone up. NVIDIA has been correcting, down 10%. AMD is down. Apple's down. We talked about Apple, but it's not really down. Intel's through the roof. Where are the moves here? Qualcomm. UPS. We'll take a look at UPS as well. So why is American Airlines up and then down? What drove it up? What drove it down? It's got to be transportation pricing. It's got to be oil pricing. Any articles? Well, they're going to give $1 million to somebody, but that doesn't really move the needle. I don't know. Probably worth a look. Why is American falling? Always interesting. And then UPS. Look at UPS falling, right? Ever since they settled out the strike, they went from 190 to 155, 156. So that's been a big drop. And so Amazon better pay attention. Delivery drivers will earn $170,000 on average. Now I got to tell you something. $170,000. If you're a school teacher, if you're a social worker, why wouldn't you be a delivery driver for UPS? Why wouldn't everyone be a delivery driver for UPS at $170,000 a pop? Let's say you can make $150,000. Let's say you're not even very good and you make $135,000 to do deliveries. Amazon, wow. And Amazon's got a lot of employees. That was one of those charts I saw. It was like 1.5 million employees. Wow. I got to tell you, I'm thinking of like quitting my job as a financial advisor. I look good in those brown shorts. I'm going to go call up UPS, see if I can make $170,000. Now, I don't mind sweating a little, carrying boxes. I can put gloves on, keep the calluses off, and $170,000. So that's why UPS is down. And let's be honest, if UPS is paying $170,000, everyone else is going to have to pay $170,000 to get the best drivers, or $150,000 or $140,000. I don't know about you, but that's big money. That's every delivery made. That's eBay and Amazon and Temu and Wayfair and all these e-commerce companies. They're going to have to raise prices a lot to pay for this. And so, I don't know. I think it's interesting. I think UPS is a story stock. And if Ford, General Motors, and Stellantis go the same direction and decide that they're going to pay their workers $170,000 a piece, then your car is going to be $100,000. Now, maybe that's okay. Maybe it is. Maybe, four-wheel drive, $150,000. I don't know. It's so interesting, right? I don't know. But, Toyota is going to raise their prices to match them. So Ford, General Motors, Stellantis raise their prices. They deal with the wages. Next thing you know, Tesla prices go up. Toyota, Nissan, Honda, the Europeans, BMW, Daimler, or what is it? Mercedes-Benz. Next thing you know, the American consumer is trying to figure out how to do a $2,000 a month car payment. I'm not saying that the union workers don't deserve it, right? They deserve whatever they can get. If they can get $170,000 a year, God bless them. I'd like to make that much money. I'd like my kids to make that much money, right? But it's tricky because once that starts, then your parts companies are going to have to go up. Everything's going to go up. And then inflation's through the roof. And then the Federal Treasury, right, the Federal Reserve Bank is going to have to take those treasuries and they're going to have to drive interest rates to, 10, 15%. It's not, and that's what we see. We think interest rates are going up, up, up because of things like $170,000 a year delivery drivers. That's not free. That doesn't get to be free. So now let's take a look at some of the things we've been seeing in this market. So I'm just going to use one example because we're actually in the quantum ecosystem. So there's ionq. So ionq was a $3-4 stock, and it was probably expensive at $3 or $4. Rigetti was at 50 cents. Now ionq is at $20. And the question is, how did that happen? Well, the way it happened is more people bought than sold, right? And people really believe that it's going up. Now, there's some day-to-day, and there's short squeezes and everything else, but we're seeing, I'm rubbing my head here, we're seeing a lot of short squeezes. If I were to take you to Yahoo Finance, let's try it. Stock gainers, trending tickers. Where's the movements, right? So if I look at stocks that are moving, this is day gainers. WeWork, I believe, is a huge squeeze. It went down to like 250. Now it's 418. Zion was probably a squeeze. But there's other ones that are even more obvious. Rig, Transocean. Oh, by the way, I have no position in any of these stocks. I am avoiding mentioning or showing any stock that we have any position in because I do not want to muddy the waters. I don't want to sully the good name of U.S. Advanced Computing Infrastructures, Inc. by trying to pump or dump any particular stock that we might own or have a position in. So we're making a point of not showing them, not talking about them, just as a compliance thing. So you got a couple of squeezes there. Let's look at the trending stocks. Oracle trending. That's actually really interesting. We're going to have to start following Oracle. I love Oracle. Oracle's a well-managed company, but it's still worth $302 billion. But well-managed. Good company. UPS, we talked about it. ionq, we think that's a pump. That's a squeeze. SoFi Technologies could be like the next Ben & Jerry's ice cream, or it could be a squeeze. You see GameStop. Not a lot of big moves. So the real question is, where's the action in this market? I think WeWork is a big one. Look at that. Casey's General Store up 10%. You saw Tesla up yesterday 10%. Right? That's a big squeeze company, and there's others. I don't want to get into it, but I think you're seeing more short squeezes. I think that's interesting. I don't think that lasts forever, but as long as it lasts, it moves stock prices. It's a big deal. And so let's go through some of those. You see Oracle, because cloud revenue was not necessarily up. What else do I want to show? Maybe steel and miners. Maybe that's interesting. Yeah, I'm glad I have so many viewers who are really watching and following. I appreciate everyone who's checking in, maybe asking questions, shooting me a tweet so that I can respond to you. I do. I really appreciate that. Here's our Twitter. You can see Chicago Quantum, U.S. Advanced Computing Infra. We stopped paying for our Twitter account because I feel like it was, a little bit of a conflict. I don't want to do that. I don't want to pay and have Twitter show my tweets more often. So we're just going to let it roll. Anything else in here that's interesting? I don't know. I think there's a lot of squeezing going on here. I look at ionq, and that's just like a poster child. So $4.23 billion. I believe the last time I looked that the revenue was limited. Let's take a look. Quarterly revenue was $16 million over the past year, running about $5 million a quarter. So $5 million a quarter, $16 million revenue, worth $4.3 billion. Wait, is it $4.3 million? No, $1 billion. All right. How about the balance sheet? Maybe they got a couple billion on the balance sheet. Maybe. I don't know. Maybe. Well, they do have some cash, $355 million. Let's look at it quarterly. Maybe it's a different number now. Yeah, $236 million. So they spent some of that cash. And, okay. Do they owe any money? Oh, they owe like $6 million. Not a big deal. So, all right. So for a company worth, what's the book value? For a company worth $500 million, you're going to pay $4.3 billion. You're going to pay about 8 times book, probably a gazillion times profit, a gazillion times revenue. All right, I could see why that stock is like a short squeeze situation, because it sure seems to have a lofty valuation. If we look at the steel companies and all that, this was something, again, we do not have a position in any of these. This is not a pump. Could be a dump, but it's not a pump or dump. We don't have them. And let's see if I can get the names to show up. I like that. Come on now. No, I don't want to try it free. Just give me the name. There. So you see Volkswagen. Even now I don't see what changed. All right, fine. You guys know the names. Volkswagen, Mercedes-Benz, right, all the automakers that are not in the U.S., even the U.S. automakers are up. Stellantis, General Motors, Ford. There must have been like some great news about the strike. Maybe the strike was called off. Let's take a look. UAW strike. Update today. Let's see. Oh, Wall Street sees a potential upside to strikes. Okay. So there's some upside. Maybe if they strike on Thursday at midnight, stocks will go up. That's great. Maybe it'll really help. Maybe all those people staying at home will buy stuff on eBay. Maybe they'll go to the movies, watch Barbie. I don't know. Maybe that's what they'll do. Maybe they'll go out for dinner and spend a lot of money. They won't be working. They won't be making trucks and cars, and those cars won't be sold, shipped, marketed. It's not a big deal. You know who's going to do well, though, is Honda and Toyota. So I would expect them to do really well here. I think it's great that this is all working out this way. But no, stocks are up. I think big strike coming, and stocks are up. I'm so confused by this market. I got to tell you, this is the strangest thing. Cleveland Cliffs. Now, there's a company I love, and I have a friend of mine who's got a huge position in Cleveland Cliffs. So go up, because my friend needs to make more money. But Cleveland Cliff is up on news of a strike. Now, Cleveland Cliff sells to the automotive industry, so I would think that they would, maybe go down if there was a strike, but maybe not. Maybe they're going to have management make those cars, and I got to tell you, I'm not sure I would buy a Ford, a General Motors, or a Jeep Chrysler if management was coming down from the offices and making the cars. I just got to tell you, I think that's a little off. A little scary to me. I think I've shown you what I want to show you. I'm working really hard not to show you the things that I'm invested in because, well, first off, it's very sad. So I don't want to do that. So maybe there's one other thing I want to show you. So the Chinese Navy is gathering in the space between the Philippines, Guam, and Taiwan, with not only an aircraft carrier, the Shandong, but 20 other ships, including destroyers, frigates, and you know they got their subs out there. And that's around the backside of Taiwan. Now, on the front side of Taiwan, the one that's facing China, they've updated all their kind of line of defense. They have a lot of, they have new aircraft capabilities, missile capabilities. So my guess is nothing's getting between China and Taiwan on the land side. But on the sea side, or the lee side, now you got a carrier, you got 20 ships. And my guess is they're going to have a lot more hanging out. And so I was just wondering, is this a major naval exercise, or is it possible that China starts a blockade of Taiwan? I don't know. I think it's so interesting, right, that you would block off Taiwan and Guam with a major part of your naval force. At the same time, North Korea and Russia are having a high-level meeting. And so I could just imagine a press release that comes out, North Korea and Russia backing China in its liberation of Taiwan. And then we all go to war again. So I don't know. This is just, it's interesting. I'm wondering if that's going to happen this week. Because why else would they send all their big guns? So, and it's not just my news. It's Financial Times, Wall Street Journal. These are pretty big news sources. And so, just remember, China attacks Taiwan. They're actually attacking the West. It's not just Taiwan. So, on that note, I'm just going to look off screen at some of my stocks and see if there's anything interesting that I might want to talk about. Probably not. Oh, you know what? I could share some stuff off my website, new data that I've published that you might find interesting. I haven't really shared anything from our model today. I was thinking about doing that. I sure love to get people chatting me and asking me, right? That would feel better. But let's take a look. What do we have? I'm going to look offline here. Really not a good day for me in the markets. It's really been a struggle. I've been kind of betting against the market, and it's really been painful for me. I need to trust the model. I need to bet with the model. I need to bet with the market, right? Because I can be right, but I can be early. And I think what's happening now is I'm early. And so I'm just suffering a huge drawdown while I wait. And I don't like the feeling of it. It's quite painful. Just is what it is. I'm not going to talk about any of that with you. That's not helpful. So let's talk about our website and where we're at. So we've been publishing a lot of stuff. So under market information, top stock market drivers, we go in about every other day. This last one was updated yesterday. And there's 10 forces that drive stock prices. There's short-term interest rates. There's long-term interest rates. There's the variance of stock prices. You might call it the VIX, but we actually measure the variance of 3,000 stocks every day. I love doing that. U.S. dollar, share price momentum. We actually manage or measure the market capitalization of those 3,000 stocks every day. Yesterday, or this morning, it was at $51.8 trillion. So if anyone were to ask you, Jeffrey, how much are stocks worth? The U.S. stock market. These are common stocks, not preferred stocks, not debt securities, just common stocks. And these are common stocks that trade. They trade every single day, at least 20,000 shares. And they can't have a negative beta, because negative beta stocks are weird. We actually publish a list of negative beta stocks. But they're weird, so we pull them out of our model because they need a separate treatment. And it's 51.8. Now, we looked the day before, it was 51.4, so stocks went up $400 billion yesterday. That's a nice day, right? Momentum is up. Government sales of debt for cash, We call it quantitative easing or quantitative tightening. We've seen quantitative tightening in the past 2 weeks of $103 billion, which is what it is. They pulled $100 billion out of liquidity in the last 2 weeks. Now, on $50.8 trillion, maybe not a big deal. Energy prices rising. After a long rise, they continue to rise. Electricity's up, but it's a little bit dated. It's from last month. Consumer theft and consumer delinquency, no new data, but credit delinquency is higher and is trending higher in the market. Labor cost increases. They're increasing across the U.S. Headlines, labor movements, but also just behind the scenes data. There's been a lot of cost here. Hourly compensation for manufacturing workers in the U.S. is up 8%. I want you to think about that. All labor, non-farm business, so not government, not farm, hourly comp was up 5.7%. So if wages drive inflation, then U.S. wages are up 5.7%. That drives inflation. That's a big number. By the way, we publish this every day, every other day. I want you to know that we have this, and we look at this data in addition to running our model to help you, our clients, or potential clients, to do better in the market. Now, the last one's inflation. There's a huge data point coming out this week. Scares me to death, by the way. And so we haven't had any data. It looks like inflation's around 4% for the year. Core PCE, core personal consumption expenditure, is going to be up 4% for the year. 3.9 in September. But I do believe, and the Federal Reserve Bank of Cleveland nowcast believes, that August is going to surprise significantly to the high side. We're going to see significantly higher inflation in August. That's going to freak out the market. Market's going to drop for about an hour, and then who knows what the market will do. I'm not the only guy who sees the data. So my guess is the really big trading desks already know this is happening, and they're already positioning themselves. So I don't know. So it's interesting. So this is something that we publish every day. Top 10 U.S. stock market price drivers and the current readings. But we've also been publishing some other stuff that's been interesting, and I want to share it with you because, there's your negative beta stocks. There's a lot of them. There shouldn't be this many. There's a lot of them. That's a lot of negative beta stocks, and U-Haul is the most negative beta stock. But then Fiserv, total surprise. Liberty Media, I get it. It's a company in decline. Even when the market goes up, it's going down. But Fiserv, they sell tech and services to banks. U-Haul, I guess that's a Geffen good, right? People go broke. They got to get a U-Haul and take their shit across country. Maybe move back in with their mamas and fathers. So I get it. Now, top dividend stocks. This is something that blew me away. For about 6 months, there were none. I want to show you how many there are right now. All these stocks are considered top dividend stocks by our model. And what that means, they met 5 criteria. They're U.S. listed common stocks. They trade every day past their data validation. They're profitable with positive common equity. They have an advantageous risk reward. They have a better Chicago Quantum Net score than the S&P 500 ETF. That's a big deal. That's like a Sharpe ratio better than the S&P 500, which is 500 stocks, market cap weighted, which is like the creme de la creme of risk reward. And actual dividends paid more than the S&P 500 ETF, index ETF. So more dividends, better risk reward. Normally there aren't any. Blackstone paid 3.9. T. Rowe Price, Avient, NXP Semiconductors, Microchip, Skyworks, Janus. Janus was in so much trouble for a while. They're a UK money manager. Stanley Black & Decker, Qualcomm. By the way, they just got a huge new contract with Apple. Capital One Financial, home of the pretty good subprime lender, BlackRock. And one honorable mention would have been NVIDIA, which came close. And then there's a bunch of companies that paid more than 7% or more in actual dividends. So if you wanted to go shopping for dividends, a lot of these aren't going to pay dividends. Again, it was like a one and done, but there's a lot of companies paying really high dividends. Sturm Ruger and Company. I guess you want to pay out your earnings before you get sued. But Energy Transfers, Pipelines, MPLX, Propane Partners, Antero Midstream. I mean, that's not bad. Now, Stellantis is interesting. So if I'm the United Auto Workers, I look at Stellantis. They paid a 9% dividend last year. Yeah, some of that should have gone to the workers. You can make that argument. Canadian Imperial Bank of Commerce, 8% dividend. Bank of Nova Scotia, 9% dividend. There are a lot of high dividend stocks out there. Big Five Sporting Goods. And then there's the stuff I don't know about. I think it's crazy. El Pollo Loco, Crazy Chicken, restaurants. Not necessarily my cup of tea, but all right. So, and we updated that. And this is so interesting. And now the other thing that I want to show you, I guess while I'm in the mix here. So again, S&P 500 is down a quarter point. It's probably going to end the day higher. I just see that there's no negative news in this market. This market is just melting higher. I'm trying really hard not to show you any stocks that I have. So let's come over here. Computers, software, and services. I don't own any of those. Now that's real business-to-business stuff. Look at how red that is. Look how red that is. You got a couple stocks that are up. Lumen, which is almost at a 52-week low. PBI, which is Pitney Bowes. Charter, Verizon, Unisys. So what this is showing me is the regular, profitable, strong companies, low risk, they're dropping. The ones that are crazy risky, Pitney Bowes, Charter Communication, Unisys, Lumen, NVIDIA, they're up. So it feels like a short squeeze to me. It feels like a systematic pump of weak companies. It makes me want to cry a little bit. I got to tell you, this is the weirdest market I've seen. I don't think this bodes well for the market when Oracle, Accenture, Meta, Apple are the ones dropping, Microsoft, Cognizant, CDW, Hewlett-Packard Enterprise, Dell, IBM, Nintendo. That's tricky. That's tricky. Money managers, how are they doing, right? These are the guys that are driving this market. Well, B. Riley's down. Cohen & Cohen is down. By the way, no relation. But who's up? Morgan Stanley, Goldman Sachs, Invesco, Charles Schwab. So your large money management firms are doing well. Now, there aren't a lot of IPOs. So they must love the fact people are trading, they're investing, they're putting money in stocks. This could be a whole market-wide pump. It's so interesting. All right. So let's wrap up with what we talked about. Oracle's down because revenue profit was kind of flat, right? Cisco's down, IBM's down, Dell's down. Adobe's down, Microsoft's down. So it's kind of like that whole space is down. All right. UPS is down because they announced that costs have gone up with the new contract. Okay, can buy that. Sophie's interesting. That's like a cult stock. We've had our eye on it. What's interesting is other stocks are also up. Other cult stocks, Upstart, Affirm. My guess is there's others as well. And so this kind of subprime lending, poor cousin lending, Let's see, where are they at? Rates and yields. These are banks. These are lenders. Some of them are non-bank lenders. Others are bank lenders. Oops. if we look, Bitcoin's up 4.5%, and most of your lenders are up. Subprime doesn't matter. Fast cash is up. World lending is up. I mean, some of these are like your pawn shop companies, and they're up. I guess it's good. I guess the market's healthy right now. Market's loving it, right? Let's lend money to poor people and charge them 36% interest. I personally don't like that business, but that's what's going up right now. We look at the overall market. This is CoiFin. By the way, we do not pay CoiFin for the data, so thank you for letting us just show it real quick. If we look at the 1 day, you see the Nasdaq's down, the S&P's down, but the Dow is up. VIX is up, almost 14. Can't believe Bitcoin's up 5%. I think that's amazing. Your yields are about flat. If we look at treasuries, they're up 0.0%. Industries up is energy and financials. Financials. So people are lending money to poor people and charging them extensive amounts of interest. That hurts, by the way. Tech, communications are down. So interest rates are up. Tech and comms go down. Crude oil over 89. 89.12. Wow. Let's take a look. Again, I love the, we're going to do bubble size as market cap. We're going to do x-axis as number of employees. And yeah, color. Color is 1 month performance. So you can see the companies with the most employees, generally speaking, are green. They've been doing well. They've been able to figure out how to handle the rising costs of employment, except then you get into that middle range like UPS, Home Depot, Target, Kroger, so the retailers, the big healthcare companies. I mean, Berkshire Hathaway, I'm surprised, by the way, they have that many employees. That's probably because of the companies they bought. JP Morgan Chase, Costco. So retailers, consumer product, FedEx, delivery services are going to suffer. But again, Amazon and Walmart have pulled ahead of the pack. They have tons of employees, millions of employees. And then you look at Tesla. Tesla's just done great. Do believe that's a bit of a short squeeze. I read somewhere it's the most shorted stock in America. And then what's this Apple? Apple's down again. So I want to find out how Apple's doing. In 25 minutes, we're going to watch the broadcast. So American Airlines, $14. Why did American Airlines fall that much? I mean, you get a good quality flight. Feels nice. Let's look monthly. And you can see American, right? Always a high end and then down. Dropped to $10 during COVID, the whole thing, and now it's up maybe 40% from pandemic lows. Really never really recovered. Anything in here? Well, earnings per share, right? Not increasing. Sales decreasing. Beautiful gross margin at 61%. Return on equity, though, is negative. Return on assets is tiny. So American Airlines as a company really run as a public utility, not really making a profit. No surprise there. These are large market cap companies looking at the change. So you can see the largest market cap companies are down today. The small ones are up. That's nice. So let's take a look at 1 week performance. Mixed. 1 month performance is up. So largest stocks have gone up in the past month. They're coming down today. Interesting. We look at the VIX. This is a delayed quote. 1389. So we're falling back from the 14 handle. Okay, that's the VIX. I will tell you one thing I noticed. I'm pulling our model off to the side here. The historical variance of stocks really has dropped. We're at 4.22 times 10 to the negative 5. 4.22. How does that compare to the data I published on my website earlier this week, late last week? We published under market information. It's a top stock market driver. 4.22. We were at 4.27. So actual stock market volatility has dropped yet again. I'm just saying. It's down. There's no volatility in the market. It's moving without really moving. It's moving without surprise. And that's interesting. That's why the VIX is so low. Treasuries. Where are we at with treasuries? Still tiny movements. Not really moving much. Is what it is. Bitcoin, yep, still up 5%. And ionq, still up 1%, right? Kind of lasting. Lasting in this pump situation. So, I don't know how long it's going to last, though. We'll have to find out. Thanks for watching. Y'all take care now. Be safe out there. Bye-bye.